And we are on. Thank you for joining us, everybody. KW Commercial SoCal meeting, bi-weekly meetings. I'm here with Tom. Tom, how do you pronounce your last name?
Uh, Kadar works. Yeah, that's
Kadar. Okay, okay. I was gonna nail it. Tom is a broker owner, Kelvin's Legacy in Costa Mesa. And we had the pleasure to have you as a guest of one of our other leaders. And we thought that we want to extend this invitation to this group. This is our basically exclusive commercial group. We have about 60 going 70 associates under the KW Commercial SoCal brand in SoCal, and very powerful group. So, proud to have you here, Tom.
great. Thank you, sir. I really appreciate it.
Yeah, so tell us more about yourself, and the virtual stage is yours, Tom.
Okay, thank you so much. I'll just kind of list off kind of where I am on a lot of stuff, and I guess we can dive in further on anything in particular. So yeah, I'll start with obviously I'm a commercial broker here in Costa Mesa. I've got a small team of about 2 or 3 agents underneath me, and then I've kind of got a virtual team as well. In the Philippines, I have 2 callers and also an executive assistant there that helps me, kind of with forms, documents, things like that. We also kind of have a wholesaling component to our team in which if we aren't able to connect with an owner based on kind of a listing, we always send them an offer as well to see if that's something they would resonate with. Obviously, we have a large list of investors that we work with, so we can kind of connect them directly there and hopefully make some money. Other than that, I'm also the broker part owner here of this KW office. Other than that, I also own a couple of property management companies, about 2 offices, one in Riverside and one in Yucca Valley. Those do long-term management. And I also own a short-term management company in Big Bear. That one manages about 45 doors. And then myself, and by myself, I own about 20 units. And then with partners, I own maybe another 5, 10 units as well for residential and commercial kinds of properties that we partner on. And then I guess maybe the thing we wanted to touch on the most is in the last couple of years, I've been raising money with my investors to partner on larger deals. There's 2 companies that I have. One is called Blue Key Builds. This is a development company that focuses on acquiring land and kind of by national parks and kind of traveling areas traveled to by lots of visitors. And we build specifically homes for Airbnb, which we own and then manage with partners, investor partners that we work with. The other one we have is called RTB Homes. This company has under contract right now a portfolio in St. Louis, in Missouri, about a 71-unit property portfolio of single-family homes, which average in price about $75,000. We chose this market obviously because the price of the homes, but also the Section 8 rentals generated there. Thanks, Manny. The Section 8 rentals there for 3 bedrooms is $1,535, and the 4 bedrooms is about $1,800. So obviously a lot of cash generated in these markets, but the appreciation isn't what it is here in California. But we have investors that we basically partner with to generate them somewhere between 8 to 12% returns, and then also get a profit split when we do sell the portfolio. So I don't know if this is something that's where we kind of want to take the discussion. I'm happy to talk about any one of these things, but it sounds like I think the most value, if I have a vote to talk about raising money for agents and commercial brokers to kind of tap into their investor base, raise money for deals that they are working on or deals they could be working on or they see. I think that's the most beneficial thing that I've learned in the last probably 3 or 4 years, is how to build that database, tap into it, create partnerships with those investors, and then obviously find deals, partner with the investors, and then make money for both of you. I think that's the biggest value that I could probably share today.
No, Tom, first of all, thank you. That was very informative. You're clearly a busy guy. So first question for me, piggyback on what you said, is what made you initially tap into that all those other businesses outside of the brokerage part of it?
Right. So yeah, I mean, like probably everyone on this call, there are days when I don't want to talk to a buyer or a seller. We've, all been there where we've wasted, 3 months, 6 months, a year working with a buyer trying to find a building, or working with an unrealistic seller, or any number of things that kind of make us not want to be in real estate, right? So, because of my knowledge, the investors that I did work with, and kind of the network that I built, I was basically along that whole process, I was educating myself on multifamily, on different types of asset classes. And on top of that, I was seeing deals very regularly that obviously I couldn't buy, but I had investors that were willing to put the cash up. So after some point, I mean, obviously, I saw the benefit of taking one of those deals to the investor and saying, hey, instead of just making, commission on this, can I help you from the acquisition to the disposition on this project? And can I be a partner in on the deal? So I don't want any commission, or maybe, I work out some commission on the back end when we sell it, but can I have an equity stake in this deal, instead of the commission, obviously make, a larger chunk on that particular asset. So that's that. I guess that answers the question on the partnerships. On the businesses, well, I guess I read the Purple Book. I don't know if you guys all know that one, the Rich Dad Poor Dad. That kind of got me started in kind of looking at things from having a salary and making a commission. Obviously, paying a large amount of taxes on every commission I make there, versus having businesses that generate money that I can do other things, and these things would just kind of automatically grow as I left them. So that's kind of the side of the aisle I wanted to be on. For the business side. Yeah,
Yeah, and it's all complementary, right? Like those are businesses that will complement
exactly.
your service directly, indirectly. You're not just respectfully what everybody, just an agent, right? You not only transact, you can also speak as a principal, right? And you can
Right.
offer extra service.
Yeah, that's a very good point. I didn't even touch upon. Obviously, as you know, whenever I talk to an investor, obviously I can put myself in their shoes and kind of resonate better with them on discussions as multifamily, because I own multifamily in a particular area. I can have a better conversation with them. But truth be told, I mean, it was really because it was in my own self-interest, because I wanted to be, obviously I saw these investors, and every time I made a money, I lost, a good amount of it to taxes. So after I learned things like, I'm sure everyone knows on this call, like cost segregation and accelerated depreciation, it was very easy, when I made, let's say, $100,000 commission check, to not put it in just the bank and pay 40% or whatever on taxes on it. Put that money towards, a small multifamily asset, uh, have the multifamily asset, reduce my tax basis to zero because of the cost segregation, accelerated depreciation, and have an asset that's generating income plus appreciating. So I mean, it's a no-brainer, I think.
Yeah, that's the game.
Right, exactly. Yeah.
Yeah. Um, any questions so far? Anybody has for Tom? Those are good pointers. A lot of information. So
I saw something in the chat from Carlos there. Yeah, I mean, I guess if you mean deals on acquisitions, I mean, yeah, um, things we're looking for in California. Yeah, uh, I don't know exactly. I mean, here in California, we're looking at, I have in Blue Key, we're looking for land, I guess. And I don't know if that's something you guys probably wouldn't want to waste your time on that. But larger commercial assets, or value add multifamily, I think everybody should have a list here. But yeah, if anything, you see anything like that, or even flips. I mean, there's another arm to our brokerage that handle, we have three deals, I think, under contract right now for flips, just residential flips. We're always looking for those too.
Let me ask you, Tom. So, when it comes to finding, more business, right? So clearly, you have your niche, like you mentioned, short term, long term, the Airbnbs, and then you have your other strategies. Like, but how would you recommend in today's market rates? Um, People, maybe looking to liquidate their portfolios or what have you. How do you go after more business today, from your perspective?
For commercial real estate business. Yeah, okay. Yeah, I mean, I guess I'll touch on that on both sides, on the brokerage side, but also as an investor. I mean, I started out in 2019, 2020, kind of acquiring properties myself. And that obviously that time the interest rates were super low. 2020, they went even lower with COVID. At that time, my buying criteria was for just multifamily because I could still make things cash flow and put only 20% down. So that's obviously everything's changed now. That's why I've kind of moved towards the Section 8 kind of fund that we have that we're raising money for in St. Louis, because obviously if you can buy, an $80,000 house and make $1,500, the cash flow there makes up for even the higher interest rates. So it's that one makes sense. And then the development side, the money we're raising there, we're still able to give, 10% returns to our investors simply because we're constructing something ground up, so we have an equity bump there, and then the cash flow from Airbnbs, if done correctly, can also make you a lot of money there. But so on the brokerage side, what am I doing? I've been in the business for probably about 13, 14 years now, so I have a lot of people that I've kind of obviously reach out to me for past work. What I am doing maybe differently that maybe you guys haven't heard of is the callers. I have callers in the Philippines that I give lists to for commercial assets or multifamily assets. I can go into detail on how I skip trace, build the list, skip trace the list, and then send that list to the callers, and they produce to me, they call about 1,000 numbers a day, and they have about 2 leads for me each a day after those 1,000 dials. So that's these people are not they're not always motivated to list with a broker. I mean, as you guys know, on the commercial real estate side, they're more give me an offer or do something like that. And if that's the case, then I have my wholesale arm, which can give them an offer and hopefully maybe wholesale the deal, or I can connect it directly to an investor. But obviously, this takes time of building a list of buyers and also sellers at the same time. So.
Yeah, and that's a massive operation, by itself, right? Do you follow up with them directly, or you have a team under you that leading handles those leads and try to convert them before it comes to you?
I do. I do have a team. The two agents in the office here get those leads. They're basically the brokers or agents, or I mean, for on the wholesale side, they're the acquisition managers. They have a conversation with the after the lead comes in, they have a conversation with them, see motivation, see pricing, and then basically get them an offer and kind of see which after some time, a few months doing this, you can tell kind of does the seller want an offer, a quick cash sale, or were they open to a listing? And then you kind of have to, see which path they want to go and kind of hold their hand and see which direction they want to go. But if I can give any advice there, I mean, I think that's one mistake a lot of commercial brokers do is just call somebody, say, hey, do you want to sell? No, okay, click, and kind of just keep mulling through. If you can kind of be more of a consult and talk to sellers and see what their motivation is and see which direction they want to what they want to do with the money after they sell the property, and give them options of do just a cash sale and then maybe mitigate their taxes as much as possible with a CPA referral. Do they want to do a 1031 and do a triple net property, and then obviously have very easy cash, lower cash flow, but some cash flow? Or they can do a DST, which I'm sure you guys are familiar with. I use King's Barn sometimes, but there's some other ones out there. And then obviously put them into something that's kind of completely passive and collect the checks. But yeah, so that's the major thing is talking to somebody, understanding their motivation, giving them options on all these, and being able to provide all those options to yourself.
Yeah, and that's true to any kind of sales kind of service related, right? Like you need to ask the right questions, what they need rather what you need, and that's how you can help. What are your conversions roughly if you get approximately 2 leads a month or maybe 10 a week, I guess? Sorry, 2 a day, 10 a week.
Yeah, yeah, 40 a month, something like that. I mean, we try to give out, the key is to give out as many offers as possible on those leads, but there's a lot of disconnect there. I mean, we probably give out probably 20 offers for each of those callers, 20 offers a month. And then I would say of those, we put under contract actually maybe one or two. But actual closings is probably 50% or less than that. So in California, especially Southern California, the wholesaling is a lot tougher just because the property prices are a lot higher. I mean, if I went to a market that's 80,000 or $100,000 houses, then I could obviously do things a lot quicker and I'd do a higher volume. But the wholesale or the kind of the price I would make, there would be a lot lower. So, I mean, I've done deals as low as 40,000, and then my highest one is probably 300,000 that I've done for wholesale.
Got it. Thank you. It's good information.
Yep.
Uh, uh, David, you had a question?
Yeah. Hi, Tom. This is David. I have a question. How do you structure your deals? Do you actually do a syndication or how do you do that with your investors?
Yeah, so I mean, each one of those is going to be very different. For example, the Blue Key builds, the Airbnb building ones, we really only have one investor per project, and we have an LLC, my partner and I, and then we create a partnership agreement between that LLC and the investor. They put up all the capital, and then we kind of manage the whole entire process, and then we split it 50-50. There's a little bit of a management fee in there, something like that. And we split all the profits 50-50 after all the expenses are paid. Then we have another one, the Section 8 one, where the investor puts up capital and they get an 8 to 12% preferred return. And then they get about a 50% after all their capital's return, a 50% break of the profit as well after a refinance or a sale. So I mean, I think you're alluding to a 503C or 503B. I mean, that's for I think a
That was
lot
my
more.
question. Yeah, if you do 503s or not, because
No,
that becomes a security then.
correct. Yeah, we're not delving into that. The number of investors I have per investment is usually under three or five. I prefer dealing with people with more net worth and can write bigger checks than having lots of $30,000, $50,000 type people putting together. But yeah, it's not to say it's not a bad model. Obviously, I think you'd want to go the accredited investor route just because it's a little less red tape, I think. But yeah, my investments are still fairly small as far as the number of investors that go into it. So I can get away with this route a little better.
So as long as your investors are not involved in daily activities, is that what the key is here, or what is the situation? I mean, how do you deal with that?
Yeah, so you're probably alluding to that if the investor is not involved at all in the investment, then it is a true syndication. But if there is some involvement there on the investor's side, then you're still allowed to create sort of an LLC in which all parties are somehow involved in the investment. So that's kind of how we have it, I would say. But yes, you're absolutely correct. If the investor is absolutely no part in the investment whatsoever, and then just simply giving money, then yes, you are basically you have to be a 503C, 503B type of syndication or investment vehicle.
Yeah, because that's one of the biggest hurdle creating those 503s, because there's a lot of red tape involved. There's a lot of expenses involved. There's a lot of how you say it, dealing with with
Attorneys.
securities is just not really worth the time. It is small. If it has to be big enough for it to really actually work. If it's small, it's not going to work.
Yeah, yeah. I mean, typically some of those can be, I mean, minimum 20, 30,000. And then obviously if you do a fund or something like that, it could be easily 50 to $100,000 dollars to set up with properly with an attorney. But again, I mean, I don't think you need it if you have, what I'm talking about is if you find a flip or a commercial property that has value add opportunity and you have maybe two or three people that you partner with to get the down payment in and kind of get the CapEx budget from. You don't need in my opinion, I don't think you need to do a syndication. You guys are all involved. You create an LLC, an operating agreement that dictates everybody's roles. These people have investment. They have some say in how everything goes. And then obviously you put in the sweat equity and then you guys split it however you want. I don't think you need, very detailed kind of, documents for that.
And Tom, I got more questions. How do you set your mindset from becoming that type of real estate agent or broker as opposed to a transactional agent or broker? Because that's completely a different mindset, isn't it?
Yeah. I mean, is it though? I mean, you really are you want to make money, right? I mean, that's why we're all here. That's the whole point of this. You're seeing the opportunities. I mean, we all come across sellers that need to sell quickly or properties that need value add, kind of a type of a component. And then you have a long list of investors that you're already talking to. So I mean, is it that different than kind of what you're doing now? It's really just your position in the entire transaction. And if you have the know-how on creating these partnership agreements, if you know how to structure everything, if you know how to write out, which you should already, how to evaluate a property and look at the budget and how much it's going to take to fix up, what are the projected pro forma rents or whatever that's going to happen after that everything's said and done. Is it that different than kind of what you're doing now?
Yeah, to me, it's kind of different because when you do transactions after the transaction is done, then your responsibility is not really that much anymore. But
Correct.
if you're an investor, then you're in it on ongoing basis, and you are responsible for that project. So
Correct.
how do you put that two together?
I mean, do you want to make, 2.5% or commission on the deal, or do you want to have an equity stake of 20, 30, 50% on the deal and plus the 2 or 3% on when you sell it? I mean, that's obviously it's yes, I agree with you. It's going to take time, it's going to take energy. But if it's a good enough deal and you believe in it, I think it's 100% worth approaching the right people in your network to kind of put that deal together.
Well, I guess there's a lot to learn here.
I mean, I assume what asset class do you focus on? Or multifamily or
No, primarily, I'm really a low key broker. I try to find deals for myself, and I try to find deals for people but lately has been really difficult for me because there's not really that many good deals or value add deals that I can find. So I have been just looking around, just trying to find good deals like everybody else does, but there's not much left in the
what kind
market at
of
this point.
what's a good deal to you? Or what
I
do you
mean, to me, in the past, I bought, value adds, things that they were doing, my experience primarily is in mobile home parks and stuff like that out of state. And, I bought value adds and I really improved them and I kept them because it had really great cash flow.
right,
Uh, I'm looking for those. I'm looking for type of, properties that has that kind of value, not just retail that you can just pay for it and then just a key turn is not my thing. That
right.
it
Yeah, I
has to
mean,
have something. Yeah,
Mo
yeah.
mobile homes, I mean, are on the same level as obviously multifamily. I mean, I think mobile home, I don't know, I'm not that, I don't invest in it, but yeah, I hear great things. Obviously that market has shot up lately over the last, 4 or 5 years. Um, yeah, I mean, if I were in your position, I don't know if you're just kind of looking at what's on the market, but I mean, I would obviously you already know the markets that you want to invest in, building the lists of owners for those mobile home parks. creating that list, skip tracing for the list, collecting all the phone numbers, emails, and then, basically creating marketing that you're reaching out to these people, pretty regularly. I think that's very doable and would, start, giving you deals. And it sounds like you already have the investors that you could basically put together. And if you want to raise money, or if you just wanted to broker a deal kind of off market, I mean, it's a win-win, I think. On both.
Yeah, you actually have investors, but but finding a good deal that you can actually go to them and say, hey, this is a good deal that you can actually believe in is very hard to find, because you used to find those at 10.5, 11% cap. Not right now. You'd be lucky if you can find them at 6 or 7. So it just doesn't make sense.
Yeah, I mean, you could find them at 6 or 7, but you can always improve the deals other ways. For example, some of the deals I've done is through seller financing, and especially mobile home parks. I think they're very open to that type of financing, and if you can explain to them like the benefit of selling all at once and getting that huge tax hit versus getting payments over time, you can make it a win-win situation of putting some small down payment down and then doing a 5 or 10-year balloon with, something a reasonable interest rate between 5 and 6, 7%. I mean, I think
Yeah.
you could make that a win for any investor you tie to it too, right?
Yes. Well, thank you so much for your time. I really appreciate it.
Yeah, of course.
Thank you, David. Who else? Questions to you want to present to Tom, or anything else you want to share, Tom? That's pretty powerful thing so far. Thank you for your time.
Yeah. I'll I don't know if my information was in the email. I'm happy to kind of chat with anyone offline as well. But again, I mean, I think I agree with David. It does take a little bit of a mindset shift, but if you're already out there and you're working to find deals and you're in the mix, I mean, I think this is the logical next step for any agent, commercial agent, residential agent, uh, doing flips or, buying, off-market properties for value add, whether it takes 3 months or 6 months or a year to kind of do the value add process, and then raising money from people that kind of have money in the bank. I mean, you'd be surprised. I mean, if you talk to, 5 or 10 of your friends, I mean, they have hundreds of thousands of dollars probably just sitting in a bank account collecting 0.01% interest. And all these people will say they want to be invested in real estate, but they're not. They're not invested in real estate. Maybe they own their own house, maybe they don't, but they always want to be invested in real estate, and they usually don't do anything about it. So if you can approach them and say, hey, this is my business plan, here's the property, I can, you can approach them both ways. Do you want to be the bank? And I can give you 8 to 10% return annually until this is all done. You can have a kind of a stake in the property, be in a second position after the commercial loan, or, be my partner, fund everything. I will take care of everything, and we'll split the profits, kind of 50-50. I think if you approach people that know, like, and trust you with that kind of business proposal, I think a lot of them would say yes. So
Yeah, and that's again just leveraging your knowledge and in your position, right? I mean, I always say that we are the gatekeepers of assets. We have the first reach in most cases of on market, off market. So it's just about your strategy and like what you want to achieve eventually.
right.
Yeah.
Exactly.
Tom, I shared the link over there. I hope that's the most recent information.
Let's see.
Or you can type in your whatever.
Yeah, that's my cell phone in there. I'll type it here too, just in case that'd be
Yeah.
easier.
So feel free to reach out to Tom if you have any questions or run things by him. It's all about the partnerships over here and to empower you with more resources. And Tom is definitely have a niche.
Yeah, I actually just finished a book on this topic. I'm working with the social or graphic designer to kind of make it pretty right now. But if you guys want to shoot me a quick email, I'm happy to just give it to you for free. Kind of talking about my history with it, the different partnerships that I've done, and then how you could do something similar. So
Yeah, well, we should host to talk about the book when it's going to be published.
I don't know that it's not going to be published by like a large publisher. I wrote it. And then they're going to assemble it, and then I'll probably just sell it on Amazon or something like that. So
Yeah.
Yeah.
Very cool.
Yeah.
Congratulations. Other last questions for Tom? Anybody? Okay, Tom, pleasure having you here again. Thank you for the time. You're doing good stuff out there. So
Okay.
thank you for your partnership, man.
Thank you so much. I appreciate everyone's time. Thank you, man.
Okay. Thanks, everybody.